Hello everyone. So we are now in series 3 of 50th GST Council recommendation. So we continue to discuss on refund related issues. Circular 197 has been issued to clarify various matters relating to refund, and we are now going to discuss the last point which has been clarified in the circular 197. This is more to do with the admissibility of refund, where the compliance relating to rule 96A1 has been done with. So what is this rule 96A all about? Let me explain you. What happens if you are an exporter? You obviously have two options. You can go for without payment of tax or with payment of tax. If you are going for without payment of tax, you need to basically take yearly once LUT, letter of undertaking. When this letter of undertaking is being taken, you also give a declaration that you will make the export of goods within 3 months from the date of the export invoice. And again, if you are a service provider, you will make export of services, and the forex realization towards it will be also received within 1 year from the date of this export of service invoice. So which means what? You are supposed to make the actual export of goods for you to substantiate that the zero rated benefit of goods has been substantially complied with. Same when it comes to the services, you should have realized the forex. Of course, RBI does permit in certain cases to make the realization in INR as well with the globalization of INR. So on these lines, you have the time limit of 1 year to realize the money towards that export of services. And if there is a failure to make this export of goods within 3 months, or the realization of money in the case of services within that 1 year, in the next 15 days time period, you are supposed to make the tax payment against this export invoice, even though you have the LUT along with interest. This is what this rule says. But what happened is that the rule also contains one specific provision, inbuilt provision, that the jurisdictional commissioner can condone the delay based on the facts and circumstances. But what happened in the inception of the law during 1718 is that the commissioner was not probably condoning the delay wherever there was a delay, and rather they were insisting on tax payment along with interest even to condone the delay. And then the CBIC has already come up with a circular way back in March 2018, circular number 37, where they have very clearly told, please don't insist upon this tax payment with interest based on the facts and circumstances, either as a prior approval or even as an ex post facto basis, which means even if they are going to make the application after all these delay, you can still condone the delay. So to that extent, the circular has already given power for the commissioner. A suitable direction has been given. The same thing has been carried forward in the subsequent master circular as well. Now what is this newly that we are talking about in this particular circular is that whatever has been already told is the commissioner need not insist on the tax payment. But what happened during 2020, 21, 22, especially because of COVID related uncertainties around the global business, there has been tremendous delay on export of goods and realization of money when it comes to services as well. Because of these reasons, in some cases, the exporters themselves voluntarily made this tax payment, complying under this rule 96A. So what this particular circular states is that even on those cases where it has been voluntarily paid by the taxpayer also, it is okay, you can give it back to them as refund. Right? So this is exactly what is prescribed in this circular. On those lines, the circular is really a welcoming one as a good measure to facilitate the trade. So the circular is very clearly stating, wherever you have already paid it along with the interest, please take back the tax amount as refund. The reason being, when the substantive compliance for export of goods and services has been met with, when the definition of export of goods or the export of services, whatever conditions that has been prescribed, since all the conditions have been met with, merely because there is a delay in the procedural compliance, we cannot say that this is no more an export. We cannot say that the zero rated benefit cannot be denied to the taxpayer. On these lines, the circular has very clearly clarified that the refund of taxes should be given to the taxpayer. But the circular has probably, is a bit misleading on two lines. Point number one, though the circular is saying that you have to give the refund, the circular did not touch upon the time limitation for this refund, because there are some ambiguity. Should I actually consider this as export of goods related relevant period or export of services related relevant period, or should I look into the residual category? Because the circular also states that in case of this kind of refund, you need to apply under any other category for the time being, because they consider this as excess payment of tax, right? So the moment you say it is excess payment of tax, for the purpose of relevant date, one has to go to the last residual proviso, which says that it is from the date of payment of tax. But typically what would happen, if at all the exporter has already paid the tax, he would have paid the tax first, and then only he would have even met with the compliance under this export of goods and services. So on those lines, there is a time gap between when you are making this payment and when you are complying with the substantive provisions. On those lines, should I look into the corresponding category of export of goods or services, or should I look into the residual category? To this extent, the circular is lacking clarity. I really wish the CBSE could have clarified on those lines as well. But point number two, again, to conclude this point number one, for an exporter who is probably a bit proactive, I don't think this time limitation is going to pose a big difficulty, especially because anyway you have got 2 years of time limitation for refund application. On top of it, because of the COVID relief, wherein the period starting from March 2020 to February 2022 has been completely removed for the purpose of refund calculation. On these lines, there is the exporter has got 4 years of time period to make the application as we stand today, which means now we are in July 2023. Even July 2019 related refund can also be claimed now. It's not a blanket 2 years extension. It is like removal of this particular 2 years for the purpose of refund calculation, for the purpose of time limitation calculation. So typically for a proactive exporter, the time limitation, the small differences or the ambiguity in the time limitation may not cause a big difficulty. The second issue which the circular has unnecessarily created here is the circular specifically states that you are not allowed to claim the refund of interest that you are paying under Rule 96A. See, one thing that we have to understand is that circular can give directions to the officer, but it need not be binding for the taxpayer. It is only binding for the tax officers, and for the taxpayers it is at their discretion to whether to follow the circular or not. But if the circular is not in line with the law, then ideally a taxpayer need not follow the circular, in fact. So let us understand what is given in the law. If you read the entire law, especially in section 50, section 50 is very specifically stating that only there should be a tax payable, and there should also be a failure to pay the tax. In this case, since the substantive, the circular itself is making it very clear that when the substantive compliance on export has been met, there is the benefit of zero rated cannot be denied. On these lines, it is very clear that as long as it is zero rated supply, there is no levy of tax. When there is no levy of tax, there is no delay in the tax payment. When there is no delay in the tax payment, naturally there cannot be even a demand of interest. When there is no demand of interest, the interest which has been already collected should also be refunded, because it is just an amount collected without authority of law. So on these lines, I have actually written a very detailed article in Tax Guru. I have also discussed on the typical action points that a exporter should take in this regard under various circumstances, whether you are going to apply or you have already applied, and whether it has got rejected, can you apply the interest or not, what are all the case decisions that can be cited on these lines. So that is a very detailed article that I have written in Tax Guru, and the link is also available in this description. So please do go through it if you would like to dive deep further into this aspect. And until then, stay tuned. GST with Saradha.